Now we're talking. Back to work. Another fantastic day comes to an end. Nice big move down today. And I'll tell you, anytime we get a big move like this today, there's usually a lot of big opportunity coming the following trading day. So a lot to cover in a very important video. Boy, the Bears got a gift from that JOLTS report. We knew we were expecting some fireworks at 10 o'clock Eastern time. But more importantly, though, anytime we see big moves that we saw today, there are 3 easy ways to make money the following day. And if we're lucky, we don't always get it, but if we're lucky, there's a 4th trade, kind of a bonus trade I'm tracking for tomorrow. Not to worry, right? I'm going to cover all of my trade, all my favorite trades in the video tonight that you guys have a game plan to make some money on Wednesday. Now, before we jump in, one of the most important videos of the week after the big move we saw today. Before we start, though, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. And if you like these lessons, if you enjoy these videos, do me a favor tonight, as always. Hit that like button for me. Give me a shout out. Give me a holler down in the comment section below. Thank you so much for tuning in, supporting the channel. But enough of the intro, Joe. Let's get ready for Wednesday. Let's start first, as always, on the 60-minute time frames. I got the Nasdaq and the triple Qs. I got the Emini and the SPY in front of us here tonight. Remember, I like to use the 60-minute time frames to plan my trades for the following day. And then later on in the video, we're going to drill down to some tick charts. Tick charts are the best tool for entry timing. So we'll start off on the big picture, and we'll drill down to some faster time frames, some tick charts, and we'll help plan the best entry tactics here for tomorrow. What are the 60-minute charts telling us? Well, if you watched last night's video, we talked about how we had that big bear move down on the S&P, and we knew the bears were trying to retest that low. They definitely got their retest after that big JOLTS report sent prices racing lower here. Nasdaq still trying to take out its low right now, but we're sitting at some real core, some real key areas of support right now. So you can easily say we're pretty bearish, right? Pretty bearish overall, but we've got major support on the S&P, major support on the Nasdaq. We still have those ranges waiting up above us. So at this point, either we bounce hard back up into those trading ranges, or we continue running lower to some pendulum targets, the Nasdaq, some measured move targets on the S&P. So a bounce off this low is one part of the game plan for tomorrow, and also too, if we keep grinding down, because we get some more jobs data coming out tomorrow as well. Not to worry, I'm going to cover both sides. I will give you guys a roadmap that way you're ready for no matter what this market throws at us here on Wednesday. Now, before we jump in and talk about entry tactics to either buy the bounce or short the move going lower, let's double check the schedule for tomorrow, because there's quite a bit on our mind or our radar for tomorrow. 3 things you want to be aware of on Wednesday morning. First thing, ADP employment number. We saw how much that strong jobs report really shook the markets, shook the bond markets, got everything rolling lower today. We have another big news report, jobs report, coming tomorrow at 8:15. Arguably, historically, what is the more important jobs market data is the ISM number coming out at 10 o'clock Eastern time. I talked about this last night. You got to pay attention whenever you got news at 10 o'clock Eastern time. So if I had to guess what the biggest potential catalyst is for tomorrow, it'd be that ISM services number. Again, another jobs report at 10 o'clock Eastern time. And the third thing on my radar for tomorrow is look at all the Fed speakers. We got Kathleen O'Neill Peace, we've got Schmidt, we got Bowman, we got my man Goolsby, my boy, talking all around 10 o'clock, right? 10 o'clock, 10:05, 10:25. So, obviously it's tough to predict tomorrow, but if I had to guess right now, I would imagine that 10 o'clock hour might be a good time to be staring at your charts here for tomorrow. So ADP employment number at 8:15, ISM services at 10 o'clock Eastern time, and the big wild card obviously tomorrow is how will these Fed speakers, right? Will they continue to say higher for longer? We've basically been hearing from all the Fed speakers so far the last few weeks here. So keep that on your radar for tomorrow. Now, back to our charts, though. It's good to know when the news is, right? But the money is made on the charts. Let's go over now my favorite trades here. We'll start tonight on the S&P and the SPY. We'll finish up on the NQ and the triple Qs here. Keep in mind, everything's pretty similar, so pretty much things are interchangeable here right now on the Emini and the Nasdaq. As I mentioned before, the bears are in full control right now on the Emini. They had that strong run down right late last week. We had that pop up, and today we basically finished the retest of that low. At this point, it's a pretty simple idea, right? We either bounce back up into that range above us, we get a game plan for that, or anytime if you guys are taking my free classes right now, or you're a student of mine, anytime we have a range breakout, right? That would be our breakout leg. We begin to look now for basically a measured move, right? Where one leg and two legs. So we either bounce back up into that trading range, or we continue with that move lower into that breakout measured movement. Again, we're going to talk about how to trade both of those here tonight on the video. Now, let's drill down now to our tick charts. Okay, remember tick charts, I think tick charts make everything easier. We use tick charts exclusively pretty much in our trade room. This is a 7,000 tick chart. You'll notice in the upper left-hand corner. And if you're watching for the first time right now, that is the 21 EMA. It's one of the most important tools we use every day in our members trade room. What are the tick charts telling us right now? There's two really, really important clues right now on the tick charts. The first one is this big move down. Anytime we see a really big move in one direction, we always expect to get a two-legged pullback and a retest of that low. A two-legged pullback and a retest of that low. One of my favorite trades on these big moves is a bounce off of that low. And as I mentioned earlier, there are really three ways to trade this. We definitely have ways to buy it on the pullback, some pretty easy ways to short this thing on the way back down. And one of my favorite types of trades after a big move is buying that double bottom as well. Those are the three easy ways I talked about earlier. Later on in the video, I'll talk about one of my favorite trades after a big move. We may not get it tomorrow, but I want to make sure you're ready for it nonetheless here. That's one very important clue. The next clue really goes right hand in hand with that big move. We've got that range on the 60-minute chart. So whenever we have a range breakout, if you guys are watching my videos a lot, if you've taken my free classes or you're in a trade room every day, you know that anytime we have a trading range that breaks out, we oftentimes get a breakout pullback, right? So breakout, pullback. It's a pretty simple idea, right? It's a range, it's a breakdown, and we expect to get that pullback, bears to come in and hold off of that breakout pullback, and again for a retest of that low. So whether you want to call it a range breakout or a big move down, it pretty much all comes together in the same stuff. So let's talk about now how to make money off this. And of course, we'll also talk about if we keep going lower here. We'll cover that a bit more here on the NASDAQ as we go. Now, there are three basic ways I want to trade this. If I want to be a buyer on the bounce, what am I fighting against? I'm fighting against momentum. So the way that you buy on the bounce is you buy with ultimately a bear trap. I call these crown reversals because it's a reversal off of this low. It's a very simple entry pattern. It's a higher high in price. It's a move right back below a prior swing and a strong signal candle punching higher, right? It's a very simple pattern. Again, as we go higher, and it may not be right here, it may be a little bit higher up. We go up, bears once, bears twice, that trap below that low. But to buy this thing, remember, we're fighting momentum. Momentum is all bearish right now, so we have to trap in the sellers on this and use their stops ultimately to fuel that move going higher. And again, if I had to guess right now how high it goes, I would guess it goes somewhere up around the underbelly of that trading range. Keep in mind, it's very similar right now on the NASDAQ, which you'll see here in a moment. So a bear trap is the way that I like to buy markets when I'm at big support here right now on the 60-minute. So I like the idea, the overextended nature of the move down. Let's trap some bears in, trying to get short too low here and buy into their stop losses. Now, once we make our way up into that breakout pullback zone, let's hope a lot of buyers come in and confuse this for a bull market. And what I mean by that is once we start running up into overhead resistance for that breakout pullback area, let's use what I call a failure pattern. In this case, it'll be a two-try failure. Buyers try once, buyers try twice, and then think about the buyers coming in and use their stops. As my first coach always said, use their pain, right? Use their stops to short this thing right back down to retest the low. If you understand the idea, we're looking for that two-legged pullback and a retest of the low. This is how we capitalize on that strategy. Now, keep in mind, as the market runs lower, a lot of times you'll get basically a bull trap to get in right before we retest that low, right? So we know where the market wants to go. The market wants to take out that big low, and one of the easy add-ons on the way down to that low would be with a bull trap. Now, look at how I draw this pattern. Remember, it's a higher high in price and a trap below that low. That's a bear trap. As we go lower, it's a lower low in price, right? And a trap above the high. That will be what you call a bull trap. So ultimately, it's a crown reversal. If you're taking my free classes right now, I call these crown reversals because they're reversing off of that low. Then it's what I call a two-try failure. Again, as we pop up, let's trap those buyers in and run lower. And it's a simple bull trap on the way back down to retest this low. Very easy entry patterns, and you guys are learning these, of course, in the free trading course. Now, which reminds me, if you're watching for the first time right now, this might make no sense to you at all. But don't worry, I teach all of these entry patterns, a lot of traps, a lot about failures in my free trading classes. I'll put a link up top there for you in the upper right-hand corner. Grab that link, take that free trading course, because I'll tell you, the strategy you'll learn in that short video series will teach you a stupidly simple trick we use every morning in our members trade room to know exactly where the best winning trades are going to be each day. And most importantly, I'll teach you my 4 favorite entry patterns to help kickstart you making money. If you're not making consistent money right now, if you're tired of missing the best trades each day, take that free course. It is perfect for someone trying to add another income stream or trying to make the jump into full-time trading. And I have close to 100 examples of things like crown reversals to buy off of that low, that nice deep pullback, trap those buyers in right above the 21 moving average. And then again, as we make our roll back down, right, we want to sell as low, as high as we can, and you want to use a trap on that, right, to get going. Lots of examples of those on real charts and real markets, of course, right, inside of that free trading course. Also, too, keep in mind, right, I'll put all the important links tonight. If you can't grab the link up top there, I'll put all the important links right below me in the description of this video. Now, one of my favorite trades is the double bottom reversal. Anytime we see a big move in one direction, and again, breakout pullback, we're looking for that pop up, that roll over, and then trying to, I like the idea of buying off of that low. To buy off that low, though, we talked about this last night, right? There's always a problem. It's either location or it's momentum. Remember that from last night's video? Remember, there's no free lunch. There's no perfect trade, right? You're always battling this balance between location and momentum. So if I try to buy off that low, it's a great place to be a buyer, right? Because anybody who's sold high will be taking profit down at that low. It's a great location. What it's not great, though, is it's not great for momentum, right? Momentum is very, very bearish. Now, the good news on this is because we have that deep pullback, we assume all of the bigger money, right? All kind of the smart money who sold that high, we assume they're taking at least a good chunk of the position off at that low. One of my first mentors in this business would always say, look for a place where everyone is a buyer. Right? Look for a place where everyone is a buyer. Now, what does that mean? Well, let's think about this, right? This will make sense, and this may change the way you look at trading for a while. If we assume, again, that breakout pullback, right? We've got sellers, right, getting short up around that high. Those sellers, we would assume, are taking a big chunk of profit, right, at that low. So is it safe to assume that sellers, right, are taking profit, right, and they become buyers? Okay. Now, if we try to go lower, and we can now rope in some rookies. What if we get the rookies coming in and getting them to try a couple times, right? Where do you think their stops would be? Their stops would be right above the high right there. Now, is it safe to assume that if we could trap in some rookies and they get stopped out, do they become buyers as well? Exactly. Everyone is a buyer. The buyers are buying because they're buying low. The sellers who sold high, they take their profit, they become buyers at that low, and then cue the rookies coming in too late. I know this because I was one of those rookies who didn't have the guts to sell the pullback, but would chase it and run into problems at that low. The rookies get stopped out, right? And they become buyers as well. These are scenarios, guys, that are it's difficult to lose money in the long run, right? You keep putting yourself in situations like this where everyone's a buyer, is a very good chance you'll make consistent profit over a long period of time. Obviously, not every trade may work, but these are great opportunities. Everyone is a buyer. Now, on a trade like this, where do you think the target is? The target's easy. It's right back to retest that high, right? Right back up to retest the high. All right. I call these double bottom reversals, situations where everyone is a buyer. The bears who sold short, they're getting out. They're buying their way out. The buyers are buying because they're buying low to begin with, right? And the rookies get trapped in. They get squeezed. And this oftentimes will really bounce nice and hard. Those are the three setups, the game plan looking for here on a big move. And again, it's very similar on the NASDAQ as well. Keep in mind, too, if we go lower here, right, if we continue going lower, because, again, this could easily keep grinding down, the longer we go lower, the more that rubber band gets stretched out after a big move. So if we end up going lower here, not a lot changes. We're still looking for a way to trap the bears in and get that nice two-legged pullback. Now, if we go lower, right, we may only make our way back up to this area of resistance, right? So we'll talk more about that tomorrow in our trade room. But same basic idea, right? Get this thing up, get these buyers to try, and back down to retest the low. Now, one thing you want to be aware of on that is sometimes these pullbacks can really rip. Sometimes they can really race. The real kind of key to this will be, how do we do around this area, right? Because it may really squeeze higher. Remember, the higher it gets, the more desirable it becomes here for the bears. But with that strong move, though, remember, don't be too aggressive on that short. Let those buyers try a couple times, right, and back down to those lows here. Remember, be very careful when it sprints up like that, because we still have the low of that trading range, and we're still ultimately here overall a bear market. Some food for thought there if we do keep going lower. Now, I talked about my favorite trade here for tomorrow. We don't always get it. Let's talk about that, though, now on the NASDAQ. NASDAQ, of course, is very similar here to the S&P. The NASDAQ, of course, you'll notice here, very strong rundown. We mentioned this earlier, right? We oftentimes see a two-legged pullback, trap the buyers in, and back down to retest that low. At this point, the bears certainly have a little more space to go, but we're sitting at support below a trading range. Again, we'll either continue down into a measured move objective, which we'll wait and see more as we go lower here, or we're going to bounce our way back up into that trading range. The game plan I gave you earlier, which was using that, remember that again, that crown reversal is all we need to find our way back in as it goes. And if we do end up grinding down, that same pattern, that same bear trap can be used to basically buy and then sell that breakout pullback. Let's talk about the tick chart now. Okay, tick chart here on the NQ. Literally the exact same thing we're seeing here on the NASDAQ as it was on the E-mini. It's a big move down on the NQ. We expect with a big move down, a two-legged pullback and a retest of that low, right? Then followed by that everyone's a buyer, that double bottom reversal. It's also a range, right? That was that range from yesterday. We've broken below that trading range. Anytime we see a range breakout like this, you have to think that I call this the underbelly of the range, right? This area becomes a definite area for not only for profit targets going higher, but also to trap those bulls in and short this thing back down again. So everything we've talked about so far on the E-mini trade chart can definitely apply here now to the NASDAQ as well. Let's talk about probably I think the easiest way to make money after a big move down is a trading range, right? Anytime we see a trading range after a big move lower. Now, if you're a student of mine or if you've taken my free classes, you know how much I love ranges. Ranges act like magnets, right? So what we oftentimes see is after a big move down like this, if we start going into a trading range, oftentimes what happens is we'll make a run lower and that will backfire. It'll backfire and wind up rotating. Okay, rotation, by the way, rotation is a word that every trader needs to learn. We talk a lot about that in our free trading classes. Rotation is possibly one of the most important kind of tools or techniques or understandings how the markets work. Markets love to rotate back and forth. So if we do end up going below that trading range, where the assumption here is there's a range down here, if we do end up going below that trading range, we oftentimes, because of the nature of this overextended, this big move down, I don't want to say oversold because it can always go lower, right? The market's going to do what it wants to do. But one thing we know for sure is as that rubber band gets stretched out further and further, there are fewer sellers, fewer serious sellers, fewer big money sellers, fewer smart money sellers that are willing to sell at this low. So oftentimes rookies get caught and it slingshots, it snaps back in the opposite direction, back to the top of that range, right? And of course, up to we call the pendulum swing, which is basically the amount we go below the range and the amount we go above the range. And this oftentimes creates this range rotation back and forth. There's that word rotation again. So this is why I said earlier, ranges are, at least in my eyes, are one of the easiest ways to make money after a big move day, because hopefully, like I said earlier, we may not get this tomorrow, but this is what I always look for after a big move. Now, let's kind of talk about this again. There'll be a lot of overlap on this game plan as there was for the S&P. So, for example, we'll call this our trading range. I don't know where the range will be just yet, but if we do end up kind of settling in here into a trading range, think about that move down. What's my problem? It's not location. It's a great place to be a buyer. It's momentum, right? So because you're fighting that momentum, we need some juice, right? We need something that will get this market going higher for us, right? We oftentimes, if we have momentum at our back, if momentum's on our side, it becomes easier. If momentum's against us right now, though, this is exactly where a crown reversal comes in handy. We need to trap those bears in. And again, this is a simple bear trap. In this situation, though, I call these crown reversals because we're reversing it off the low here. It's a higher high in price, a trap low, and then remember, it's a nice strong signal. The signal candle is really, really important, right? We don't just blindly trade these, right? The candle closes firmly above the moving average. We talk about this in the free trading course. So now, at this point, where does the market want to go? Where's the market want to go here? It's going to want to take out that pendulum swing, right? It'll want a pendulum to the opposite side. Okay, what I usually do on these is take half the position off at the high of that trading range, right, and leave a quarter and a quarter, right, for a runner as we go back up to the opposite side of that pendulum swing. Now, here's where things get a bit tricky. You have to understand that as we start making our way higher here right now, there will definitely be channels coming down overhead, right? There'll be some big channels. There will be sellers waiting up around those highs here. So as the market goes higher here right now, I have to buy as low as I possibly can, okay, to avoid those sellers. And so what you do is you look for, you guessed it, another bear trap. Traps are you will see a lot of examples of this in the free trading course, right? But traps are always the easiest way or the most effective way to buy as low as you can. And without sounding like a broken record here, that's the best entry. That's the best entry I'm looking for, right, as we rotate higher, right? So again, it's a crown reversal. Again, crown reversal, you're reversing off that low with a bear trap. And then as we go higher, I'm anticipating there'll be resistance up here. I want to buy as low as I possibly can. And to do that, the only way to do that is with a trap low, right? A bear trap, higher high in price, and that trap low. Once we get to the other side of that trading range, Okay, now we find ourselves in very similar territory. We have this range breakout. We know we're expecting this breakout pullback, right? Back down again. What I'll do is I'll wait for this pendulum swing to be completed. Once the pendulum now has been completed, this will feel very bullish. Right? This will feel very bullish. And just as we talked about on the E-mini chart, hopefully the buyers will come in and foolishly start buying on this pullback. Remember, in this location, great location for a short. What's the problem though? Momentum. Right? Remember, there's no free lunch. It's always one or the other. It's location or it's momentum, right? So as we're going higher, great place for a short. But as we rotate off that low, keep in mind, these can oftentimes punch and keep on going. All right, we'll see if it happens tomorrow. But what we're looking for is as we run into overhead resistance, we trap those buyers in. We have to get their stops hit to fuel that reversal going back down again. These are called failure patterns. This would be a 2-try failure because of all the momentum coming off of that low. Sell right into those stops. Right into those stops. This is, by the way, this is a scenario where everyone is a seller, right? Everyone, okay, there you go. You get the point, right? Everyone is a seller. Pardon the space there for whatever reason. But you know what I mean? Everyone's a seller, right? Anyone who bought the low or bought on the way higher, they're taking their profit up there. The buyers are selling their way out. Who else is up here? The sellers are coming in and selling that breakout pullback, and then all of a sudden, cue the rookies. The rookies come in. They didn't have the guts to buy it down here, but they chase it once they see momentum going lower. Wrong spot to be a buyer. The rookies get stopped out, and the only way they get out of their long trades is, you guessed it, to sell their way out. This is a scenario where everyone is a seller. Like I said, think about these scenarios. These are trades that it's just difficult over a long period of time to lose money. And then what do you think? Where does the market want to go at this point? Where does it want to go? It wants to rotate back. Remember, that's what ranges do. They rotate back and forth. What is the big challenge now going lower? Sell as high as you can, right? Sell as high as you can. And usually what works the best is I'll go out and find a channel off those lows up around that high. You know we do, right? Look left, find those prior swings, and whack that first test off the high of that channel. Remember, as we always say in the video classes, it's failures at the edges and traps as it rotates. It's failures at the edges, it's traps as it rotates. Failures will trap the bears in, failures will trap the buyers in, the bulls in, right? And of course, trap setups allow us to sell high as it rotates lower, right? And buy low as it rotates higher. All right, guys? Again, one of my favorite trades here is that overextended nature below a trading range. And of course, keep in mind, right? If we get a range here tomorrow and we wind up going sideways and we pop up, right? Same game plan, right? 1, 2, back down into that trading range. That's a very simple way to do it. I just always love it when I see a range because it punches lower. We can trap in and squeeze. These oftentimes can become very lucrative trades here early on in the session. And then once those inexperienced traders get roped in, bam, right back down into that range, playing this on both sides of the market. That's why ranges are so special. That's why ranges are my favorite, right? Because it kind of gives you some structure you can use to formulate a game plan for the following day. All right, guys, now we know how to trade this for tomorrow. The big question mark now is, how will that ADP number come out tomorrow? How will that ISM services number? What will Goolsbee and all the Fed speaking crew, what will they say tomorrow? There's a lot of up in the air right now regarding how this news received here. We saw the JOLTS report just get smacked lower this morning, so we'll definitely be watching that tomorrow morning and seeing the markets play off on that. Speaking of tomorrow morning, 8 o'clock Eastern time in our trade room. I can't think of any better way to learn this stuff. Come out every morning, 8 o'clock Eastern time. I'll put all of the links you guys need, all the free class links, all the trade room membership links. Again, tomorrow morning, we'll learn together, trade together, succeed together. I can't think of any better way to do this than to come out, ask questions, follow along, look over my shoulder. What I would do is I would start first with the free classes, learn the basic strategy, right? Get the wind at your back, get some momentum going in your favor, get warmed up, and that way, soon enough, you'll be ready to go and trade with us sometime soon in the morning trade room at 8 o'clock Eastern time. Don't forget, too, if you have any questions, if you have any trouble getting access to any of this stuff, don't be afraid to call the office or use live chat. I'm always here to help out. So if you need help, don't be a stranger. Megan and I are always here happy to answer questions about brokers or data feeds or whatever you guys need help with along the way. All right, guys, I'm going to wrap things up here for now. A pretty darn good day today. Had a really good session in the morning trade room. Hope you guys did make some money as well. But get a good night's sleep. Get some rest. We'll see you guys hopefully tomorrow morning. Back again, 8 o'clock Eastern time. If not, we're going to come back tomorrow night. We'll do it again tomorrow night. In the meantime, be well. Be nice to each other out there and be here next time. Adios, amigos. Bye-bye for now.